Hello, I'm Allison Barbosa, and I'm delighted to be speaking today with Dilnisin Bayel, Managing Director, Europe, Banking Credit Lead at Accenture, based in London. Welcome, Dilnisin. So it's a pleasure.
Thank you.
Today, Dilnisin and I will be discussing the growing buy now, pay later trend that is sweeping across the industry. When we look at consumers and merchants who have adopted buy now, pay later, we can see why this option is so appealing. It's convenient, it's customized, and it's seamless. It reduces the price barrier for the consumer and gives them the option to purchase at any time, and provides merchants better chances in making the sale. There's certainly a lot to cover with the buy now, pay later, and it appears to be here to stay. So I'm interested in your thought, Dilnisin, but at first, let's start with just discussing a little bit about your role and what you do and how you got there.
Yes, sure. Thank you, Allison. So my name is Dilnisin. I have been working for more than 25 years in Accenture. Currently, I'm based in London for the last 3 years, and I lead credits across Europe. And I'm also responsible for advanced customer engagement, again, across Europe for Accenture. And before moving to London, 3 years ago, I used to be the country managing director for our practice in Turkey. And in my past, I did a lot of projects in the digital transformation, credit space, customer experience. So this is an area which different things converges as the customer needs emerge and also as the digital natives step into this area.
Well, that's great. That's such a nice career, and it sounds like you've done a lot. So I'm really interested in hearing your insights. Why are we seeing this trend in buy now, pay later? And what exactly is this solving for?
I think a couple of things coming together, because what I have been observing in the digital natives is they're probably not necessarily bringing something new, but they're able to find something already exists, but finding a nice solution for that need. And I think this is more related with why we have now buy now, pay later so much in the agenda of different players, is because it's seamless, it's at the time of the purchase, and it's giving an ability to the end customers to access to money for what they want to buy. So the purchase and the credit life cycles used to be separate, because you were kind of dreaming of buying something, and then you were in the process of applying for a loan, getting the loan, and then use that money for buying what you were willing to buy. But now the moments are kind of happening at the same time. So when you go into a shop to buy something, you're able to access to money and you're able to buy it at that moment. So you don't need to either save and then buy, or in order to buy, apply for a loan and then buy. So everything comes together. So I think it used to be an existing need, but it was more met by different companies. The retailers were selling their goods, banks giving the credit. Now it's kind of converged at the moment of the need.
Yeah, no, that's very interesting. And you're right. It's something that we saw many years ago in a very different version. And this is more the digital version that is also, it changes the way that it's been put together. Yeah, for sure. What are the key aspects of this trend, and what, in your opinion, are some of the challenges?
I think the main thing is it's being kind of seamless, and it's giving the opportunity to the end customers to access to money, because the previous models were more like the merchant defining who should be the lenders. It's still the same for example, auto loans. So like the auto manufacturers are deciding who should be the financer of an auto loan, and then they make the agreement and customer more or less follow that process. So now customers have the option to choose by what company's proposition they would like to meet this expectation and borrow the money. So I think one kind of ease is at the time of the purchase, you're able to decide from which lender, you would like to use the money and then apply for a loan and then get the offer of like 3 installments, 4 installments based on the offer and use the money. Or in some cases, retailers are also using these proposition as an embedded model. So like maybe some of the retailers are also offering buy now, pay laters, collaborating in the background with the providers. The challenge I see is from 2 fronts. One is the overall affordability of the customer, because when you apply for a loan at the time of the purchase, it's not really considering whether your overall affordability is under risk, or for some customers, maybe the small amounts adds up to an amount which is then difficult to manage. So one difficulty is how the affordability is being measured at the time of the purchase, and how the customer is kind of aware of to what extent they can use this proposition. So like if I'm earning 1,000 per month, can I borrow until 1,000 or 10,000? And at the time of the purchase, I don't know it. And if I'm using different providers, these different providers are offering you the money at the time of the purchase without considering the overall kind of affordability and also total loan at a point I have. The second is, even though you are a customer which has the affordability, if you're buying things from different vendors every day, let's say, then next month you need to make sure you kind of keep track of paybacks. So let's say in the weekend you go for shopping and buy from different shops and use different offers, let's say 4 vendors offers, then you need to pay back 1 month later to 4 different providers at that same day. So that's becoming a challenge, and not because maybe you don't have the affordability, but you might be forgetful. It might be difficult to manage your paybacks and cash flow and etc., because you're not able to also make always a direct debit proposition and etc. linked to it. So we start seeing some kind of unintentional consequences of this product. So like access to money has been eased so much, but then the overall affordability and payback is not that much well managed across the providers. And if you're a young customer, this was also, I think, a topic has been long discussed. If you're a young customer who is planning to borrow for mortgage in maybe 5 years' time, you might already have a track record of some payments which were forgotten and etc., which might also impact your mortgage credibility, which we're going to see probably in a couple of years. So these are, I think, the challenges, both for the end customers and also for the providers, because nobody is able to see the full picture.
No, that makes sense. Yeah, no, that's great. That's great insight. And it certainly sounds like the trends are the good side of the BNPL story, but the challenges could be a problem in the future for customers. Can we talk a little bit more about the regulatory requirements in this field?
So, of course, banks and also credits are always subject to regulation. And for this specific product, I think 2 aspects are critical. One is how the overall affordability of the customer is taken care of. So either by giving visibility or having a visibility at the country level in order to make sure customers' overall affordability is not kind of exceeded. So there's kind of a taken care of on behalf of the customer, and customers are very well aware of where they are. And the second aspect of this paybacks, which like how the customers can see their payback so that they don't unintentionally miss any payment, which can then impact their overall score if they want to borrow a mortgage or another loan in their life. So I think those aspects are going to be critical, and probably also from the provider side, as we are seeing also digital natives, to help them to understand how they need to really treat this product, because it's definitely a loan product, which is also impacting their overall capital adequacy, overall balance sheet performance, because this is in the balance sheet of those players. So I'm sure regulators can also help those providers to better manage their overall portfolio. But my point is, I think there is a need for this product. So we cannot ignore the need. So we need to make sure the context and the way it's provided and the way it is managed is handled properly so that the need is met, instead of maybe not giving the product or not kind of accepting that there is a need for this product. I think the customers have been proving that there is a need for this product.
Dilnisin, what are the future expectations for banks in this space?
It's a great and very important question. So, I mean, I think there's a couple of angles. One is the growth expectations, which is also in the recent study of World Pay. There's an expectation to have further growth, both in the e-commerce and physical payments use of buy now, pay laters. So this is going to remain, and it's going to be kind of part of our life. The second topic is more related with how banks can benefit from what they have as their strength. So I think there are a couple of areas, which is access to funds. They have lower cost of accessing to funds at the given context. We are all talking about high inflation rate, high interest rate. So most of the digital players, I think it's going to be difficult to access to funds, while the banks have it naturally. The second part is for banks who have big acquiring and issuing business, they have the ability to already leverage the strong base they have, because they have the merchant network where they can offer this product, and they have the big customer base for which they know the spend behavior, affordability, how they use their credit cards, and etc. So I think this is a great advantage for the banks to leverage their existing presence. And already some banks have been trying this with some players. So some of them have been doing it more like one-to-one with big retailers offering their card for a buy now, pay later provider. Some of them making it for categories of spend like health, and partnering with a number of health players to provide it. But so far, the model has been more like buy now, pay later as a separate product, instead of making it together with some other products, which I think we will also see some trends related with cards having this capability, because on the other side, we see that the usage of cards are declining, and there's still unused credit limit in the cards. And already in the cards, banks are able to manage the paybacks, the affordability, the spend, the offer. So potentially banks will be in with a different model, like not a separate buy now, pay later versus card and consumer lending and etc. But probably we are going to see some of the convergence into the product portfolio as well. And then they're going to be also playing this model for, again, covering up all the other things we discussed in the beginning, like how I can manage better the overall affordability of my customers, how I can help them to make sure they're not missing payments, paybacks, and etc. are under control. Because in any case, every month we are receiving from our banks the bank statement. They know our cash flow and income. So it's kind of easier probably for them to manage it for their customers as well. And maybe another angle is also the merchants, because the merchants' overall transaction flow is also passing through the banks. So banks can also be the facilitator for the merchants to manage those transactions and help them also provide these products more like widespread, not just with the big retailers, but any merchant having my POS or having my customers shopping from them, I can offer it. So my expectation is banks, I think, can enter to this space with a different or a bit changed model, and they can benefit from their existing strengths, customer base on the merchant and retail, and also access to funds.
Yeah, no, all great points. I mean, I think the bank, it's really an important piece for banks to be part of. And I know that there's been a little bit of reluctance on some of the bank side. So I think we need to kind of get them to that next stage, because I agree it's going to be an important part of this offering. When it comes to potential for monetization for the network, what are the future growth connected areas that these BNPL players might leverage?
I mean, I think one angle will be more as you're rightly saying, the overall network of the merchants, because we are seeing that this is going to be like a virtual marketplace, because any player who is having a strong network of merchants, they're going to be able to say, okay, in my merchants, this is my offer, and if you're a customer, you can benefit from that. So it will be like a pull impact for the merchants in that space. Together with that, I think there might be opportunities for, like, as a customer, I can also tell upfront which are my interests, which are the merchants I would like to shop from, and what kind of offers I would like to have. So, like, as a lifestyle, you can then say, okay, I like sports, so offer me things in the sport different from the others, because I would like to spend more money, or like electronics, high techs, and etc., or travel. So I think there is a potential for connecting it with the lifestyle of the customer and monetizing that lifestyle aspect, and differentiating with the offers that you can personalize, because at the moment the offers are same for everyone. Like, if you're providing 3 installments, it's always 3 installments. It's not changing based on my preferred way of spending my money and my life. So that's why I think there is going to be more kind of emphasis, or there can be more emphasis for loyalty, which can then also bring different customer segments, because at the moment it's probably also more towards mass market. But I think there is a lot of room to also propose it in a differentiated way for upper mass, affluent like customers based on their lifestyles, and making it more like an convenience and ease of access to money, spend behavior, rather than just assuming it's always a consumer loan. Yes, it's a loan in the background, but the way it's offered, if it is connected with a loyalty and kind of my lifestyle, is kind of taken care of as I'm receiving the offers, this can also be a nice monetization option together with this product. And probably also we are going to see changes in the way the banks are integrated into the value chains of those providers of those lifestyles. Because if I am a customer who is more like interested in education, reading books, culture, and etc., according to my lifestyle, the banks can also have different probably integration points for their offers into those providers, merchants, retailers, in order to bring those to me. So this will be probably a product both benefiting to the end customers, because they will have more personalized options, and to the banks and the merchants, because then they will be more proactive in offering things to me which resonates.
Yeah, no, those are really great points. I like that view, because you're right. It becomes more than just a loan, and then looking at it in different aspects so that you can find ways to be more value add in the different payment industries. That's great. Thank you. And Dilnisin, I'd like to close with one question that we ask all of our guests here on Pause for Payments. If you were to give advice to the rising stars in our audience, what would that be?
This is the most difficult question probably of this interview. Probably, I mean, a couple of things. So let me try to. I mean, I will probably not say them in the order, but like the couple of things that I think they're important. So one is the resilience and determination. So making sure you really know what you want, and you kind of find a way that you're able to remain resilient throughout your journey. Because I see that career is like a painting. So you have lots of colors, but you define what you want to paint and which colors you want to use. So it's never going to be like a short sprint. It's a marathon to get and in parts, it's kind of a sprint, but you need to know upfront that it's going to be a marathon. And I think this resilience and determination gives you strength in your journey, which is important both for not giving up, because there will be difficult moments. And every time you leave the difficult moments, I think it's important to remember that others also experience those. So there's always a way out. And I think also making sure you're able to ask help. So asking help is not weakness, but shows still that you're determined, you want to get over it and you need help, but you control the help as well. So asking for help over that journey. And also speaking up. So when you need something or when you think it's not the right thing, speaking up. And also, I think in this one, the other important thing is making sure you know how you can refill your energy, because that resilience and determination sometimes is difficult to continuously fulfill. That's why I think it's important to refill your energy. So the second point I would say is more about how you are kind of connected with others. So I would say being open-minded and inclusive is important. I always kind of learned a lot from others, and I always value having different people around me, not because of the ethnicity, gender, and etc., but really from a background perspective, from the way of thinking perspective. So you need to really facilitate, I think, that inclusiveness when you are building up your career. This means you need to build networks. You need to make sure you are able to make 1 + 1 bigger than 2. But also, I usually value not like working always the best people, but finding the best of in every people you work with. So making sure you're able to create the atmosphere which is safe for everyone to contribute and create with you, which is more around the collaboration and how you're leading that collaboration and giving space for everyone. And I think the third point for me is more around the passion, like what you really want and how you're differentiating and excelling what you really want. I think it's important for everyone to make sure they have this differentiation point in terms of what makes them different, what's their strength, how they're contributing into the others and the business and also the teams they work with and etc. And making sure they always have a certain quality standard and differentiation points. I always like the notion of being authentic and being able to reflect your passion into what you're doing with you. So it's not like executing things, but really doing things with your heart and mind together. So these would be the 3 things to summarize: resilience and determination, being open-minded and inclusive, and then making sure you're differentiated and also excelling things that you like and you have the passion.
That's great. No, thank you, Dilnisin. I totally agree with you. I mean, I think those are really great points and it's really good advice. And I particularly resilience, passion, authenticity is all really good points that people should continue to practice as they can. So thank you very much. Well, Dilnisin, thank you so much for joining us and sharing your insights. I felt this was a really good discussion. I really enjoyed learning more about BNPL. And we really appreciate your time. I know that you're very busy, so appreciate taking the time in the schedule to go through this. And I want to thank the audience for listening, and please tune in to listen to Dilnisin talk about BNPL. And then every week we have other very inspirational leaders across the payments industry. So thank you again.
Thank you for inviting me. It's a pleasure.